yung pagmamay-ari ng creditor from 48 to 0.47 bumaba, no? And since bumaba yun, connected yan dito sa equity ratio na from 0.52 umangat naman ng 0.53. Meaning, debt ratio is inversely proportional to the equity ratio. Hello everyone, so how are you? I hope you are all doing well. So for this presentation, we will going to have our discussion regarding controlling. So we're actually done with the evolution of management theory, with the engineering management, with planning, leading, and organizing. For now, we will going to talk more about solely in the topic of controlling. Now, this is the fifth chapter of our topics, fifth topics actually. And when we say controlling, by definition, it is the process of ascertaining whether organizational objectives have been achieved. So take note sa terminology na ginamit, ascertaining. We are trying to ascertain kung na-achieve ba natin yung goal or not. Now, if not, why not? And determining what activities should then be taken to achieve objectives better in the future para hindi na maulit, or if maulit man, minimal na lang yung frequency of occurrence ng pag-ulit ng non-achievement of that specific goal. So that is the controlling. We are controlling the current operations in every aspects of the organization for us to be able to meet our objective. Okay, so don't forget that. So for the steps in control process, we have these 4 steps of control process. For the first one, we should establish first the performance objectives and standards. Ano ba yung objective natin? No? Ano ba yung goal as a whole? And of course, yung standards natin for us to be able to achieve that objective. Now, the second one is the measuring of the actual performance. Nag-set tayo nung una, na ngayon pangalawa, we are measuring now the actual performance. Ano ba yung nangyari na actual? Of course, we can now then compare the actual performance to our objectives and standards. So, comparison ng target versus yung actual, yung planned versus the actual. For the fourth one, we should now take the necessary action, taking the necessary action based on the results of the comparison. So here is the flow chart of the steps in control process. Again, establish performance objectives and standards, measure actual performance. Does actual performance match the standards? So if yes, do nothing, then measure mo naman yung actual performance. Pwedeng doon sa specific na process na yon or sa mga ibang process na. Now, does actual performance match the standards? No. Once na nangyari yan, this is now the proper time or the right time for you to take the corrective action. That is why it is called controlling. So, take corrective action, then after taking that corrective action, go again to the measurement of the actual performance. You should now measure again the actual performance hanggang sa mag-yes na siya. No? And this is actually a looping process. Again, this is the steps in control process. Next, establishing performance objectives and standards, the first part of our control process. So, I have here a pictures. So call pictures yung mga next slide for us to know how we can actually establish the objectives and standards for our target. For example, sales target, in what way natin siya malalaman if na-meet or not? Of course, quantity or monetary terms. Quantity, gaano karami yung nabenta based na sa target, or in monetary terms, gaano ka laki yung amount, yung value ng pera na pumasok based sa ating sales. So next, for the production targets, this is actually can be measured using quantity or the quality of the output natin in production. For the worker attendance, actually pwede sa atin makakita ito in the rate of absences, malaki ba or maliit yung rate of absences ng attendance natin with regards to our worker. Now, for the safety records, number of accidents, for given periods. Actually, nakalagay ito sa sa labas ng mga manufacturing plant. This plant is working 120 hours without accident. Ano lang yun? Saglit lang yun. Ibig sabihin, nung kailan lang, days ago lang, nagkaroon ng accident sa kanila. If ever na nagkaroon ng accident, yung count na yun is babalik siya sa 0. No? So, this plant is working at 0 hour from accident, free from accident. So, kapag ganun, kaka-occur lang ng accident. So, something like that, if ever na number of accidents natin for given period is mataas, then hindi natin nami-meet yung objective natin with regards to the safety. And that will be the time na mag-take tayo ng corrective action for us to be able to come up again sa ating road towards our objectives. That is why it is called controlling. Binabalik natin sa kung ano pa yung tamang daan na papatunguhan dapat natin. No, ayun yung controlling. Now, we have these different components of organizational control systems. First is the strategic plan, somehow related to planning. Next, we have the long-range financial plan and the operating budget, performance appraisal, statistical reports, and policies and procedure. So, kung papasinin ninyo na nag-overlap na yung ibang management functions dito sa controlling. And specifically, we need to tackle here the strategic control systems. When we say strategic control systems, the term strategic actually means long-term. No, ano ba yung long-term perspective natin for the whole company? Ano ba yung plan natin? For the control systems ng strategic, since this is a long term, this is actually measured using financial analysis, no, or the financial ratio analysis. These are two different terms, by the way, and we will go to tackle these guys pagdating na ng management accounting, no. So for this controlling topic, we will going to enter the financial analysis. Let's talk all about financial analysis first. So when we say financial analysis, the success of most organizations depends heavily on its financial performance. Now, using financial analysis kasi makikita natin, nagpe-perform ba tayo at a optimum level, or if not in optimum level, at least somehow, are we working towards our goal? Na nandun ba o baka lumilihis tayo? Madali mo kasi makita yung output and kung ano ba naman nangyayari sa isang organization based on their financial statements. That's why we need to have this financial analysis as part of our controlling process para makita natin nasaan ba tayo ngayon. If naliligaw tayo, ibalik natin. No? So, financial analysis is a review of financial statements, will reveal details about the company's performance, just like what I have said earlier. So, balance sheet contains information about the company's assets, liabilities, and capital accounts. For some of you who took the ABM during their senior high school year, so I hope you are all familiar with this. And of course, the income statement that contains information about the company's gross income, expenses, and profit. So, let's try to have our discussion regarding financial ratio analysis. Ayun yung sa financial analysis, guys. No, inaaral natin ano ba yung sinasabi, balikan natin. Ayan. Ano ba yung sinasabi ng balance sheet, ng income statement, ng statement of changes in equity, it can be owner's equity, or it can be partner's equity, or shareholder's equity, depende kung ano yung organization na meron tayo. That is the financial analysis. Ano yung sinasabi ng financial statement as a whole? Si financial ratio naman, ito yung we are having the ratio for every financial aspect of our financial statement. So, this is most useful and reliable method in financial statement analysis. Mas nakikita natin dito yung pwedeng mangyari in the next months of operation if we going to continue the operation. So, mababayaran ba natin yung utang or not, etc., etc. So, we will discuss those in the next slides natin. Okay. We have these 5 categories of financial ratios. For the first one, we have the so-called liquidity ratios or the short-term solvency ratios. Second, we have this solvency ratio or the debt management ratios. Lahat ng mga other terminologies sa kanila, other calling sa kanila, ay may kinalaman. Mamaya, I will explain them step by step and isa-isa din. No? Operating ratios or the asset management efficiency ratios. For the fourth one, we have here the profitability ratios or the financial performance ratios. Next, the last one, we have the shareholder ratios or the growth ratios. First one, let's discuss first the liquidity ratio. So, liquidity ratio measures the ability of the entity to pay its short-term obligations using its current assets. Take note, short-term obligations using its current asset, also known as short-term solvency ratio. When we say short-term here, no, sa accounting perspective, short-term or the current assets or the current obligations, the short-term obligations, stands for the obligations within 1 year. No, less than 1 year. Ayun po siya. Kaya siya short-term. Now, under liquidity ratios, we have current ratio, working capital, quick ratio, cash ratio, and cash to current assets ratio. These are the formulas ng mga ratio na yan. No, ito. So, let's try to talk about this. No, isa-isahin natin. First is the current ratio. So, when we say current ratio, this measures the ability of the entity to pay its current liabilities using current assets. Diba kung babalikan natin yung balance sheet, we have there the current assets, the current liabilities, and natin kukunin yung data. Now, ang sinasabi nito ni current ratio, kaya ba nating bayaran yung current liabilities natin? Again, when we say current na term, less than 1 year, kaya ba siyang bayaran ng ating current na assets? When we say current assets, these are the assets of the company less than 1 year. Using the EMP financial statements, solve for their current ratios. So, EMP financial statements, actually, ito po siya. I have here the financial statements of Emperador Corporation. So, let's check. This is the actual, guys. No? Ito yung nilalabas ng mga company. Public, naman to. Public document naman ito. Oops. Ayan. So, ito ang itsura niya. No? First page, Securities and Exchange Commission, and all details regarding the company. So, Emperador, the quarterly report nila, then yung mga details sa mga next slide. Ayan. Eto. So, ayan. We can actually browse this. Lahat ng details regarding sa reports nila ng finances nandito po, and this is public. Bakit po ginagawa ito ng Emperador? Dahil they are a publicly listed companies. When we say publicly listed companies, they are listed sa stock exchange and traded ito sa market. So, ito siya. Consolidated statements of financial position. So, ayan, nandyan lahat, audited and unaudited. So, this is a first quarter report of the Emperador Corporation. So, we have here the first page, Securities and Exchange Commission. Browse na lang natin, no? So, ito ang tsura. Public paper naman ito. So, we're going to use this as our example. Emperador Corporation Incorporated, by the way, is a publicly listed company. When we say public company, guys, they are listed in exchange, in stock market, in the stock exchange. Therefore, they can be traded by the public. So, yung shares nila, pwede yung i-buy and sell anytime. So, ayan. Ito ang itsura ng report na yan. So, on this report, i-browse ko lang, no? You can see the consolidated statements of financial position. This is actually a balance sheet. No, balance sheet yan. We have here the total assets and the total liabilities and equity. Diba yung golden formula sa accounting assets is equals to the liabilities plus equity. Ito yun, balance sheet. We also have here the consolidated statements of comprehensive income or what we call the income statement. Ito po yan. They have the notes. So, may corresponding notes din yan. Comprehensive income. And lastly, we have also the consolidated statements of changes in equity. So, ayan. What we're going to do now is we're going to use this data, itong mga numbers na yan, in our analysis for financial ratio para makita ninyo how is it computed, no? So, let's go back. Using the EMP financial statements, solve for their current ratios. Again, ulitin natin. Pag sinabing current ratio, that is current assets over current liabilities. Ano ba yung current assets nila? So, they have current assets here. Ang gamitin natin yung 2019. This is March 31, 2019 yung report. Ito yung gamitin natin dahil yes, meron na tayong latest pero ito yung available na file kasi sa akin. So, let's copy this one. And I have here the Microsoft Excel na naka-format na siya, naka-template na siya. Lalagyan na natin ng data. And of course, ipapakita ko rin naman sa inyo how it is computed, and the most important thing is yung analysis sa numbers. Okay, so for the current assets, let's paste this. They have 57 Pagdating yung font para medyo malaki. So they have 57,167,964 current assets. So for the current liabilities, they have this. So current liabilities. Ayan. Paste. And same with the meron 12 lahat. Ayan. Same with the 2018. Nice. Copy natin yung current assets. So we have here current assets. And the current liabilities. Which is current liabilities ito. Okay, so let's copy this ito. And change natin ito 12 yung font. Lumiliit kasi. Anong ibig sabihin ito? Anong ibig sabihin? As you can see, guys, we have here the values for current ratio. And this is computed based on this formula. Again, current assets over current liabilities. Dinivide lang. As you can see, ito. Ayan, B4 over B5. Same with 2018. So, B4 over C4 over C5. Now, computed natin dito na current ratio is 2.73 sa year 2019 and 2.77 sa year 2018. Anong ibig sabihin nito? Again, balikan natin yung ating PowerPoint presentation. Sabi dito, when we say current ratio, this is the measures the ability of the entity to pay its current liabilities using current assets. Therefore, in every one liability of Imperator Incorporated during 2019, yung during report as of March 2019, they have 2.73 pesos na current assets to cover every piso na current liabilities. No, every 1 peso na current liabilities, they have 2.73 assets to cover that up. Meaning to say, no, kaya nila. No, kaya nila magbayad ng current na liabilities nila. Hindi capable for that. Okay, and sa 2018, if you can see, ang naging current ratio natin is 2.77. So mas mataas, ibig sabihin, nung bumaba pala ang current ratio nila from previous year 2018 to this year 2019. But still higher than 1 ito, so kaya pa rin nilang makapagbayad ng current liabilities nila. So that is what the current ratio means. Let's check the answer if tama tayo. So 2.73 is to 1 and 2.77 is to 1 for the 2018. So yan, tama naman tayo. Naka-ano siya guys naka-ratio siya dahil this is a ratio current ratio. Okay, next, working capital. Working capital measures the amount of fund available to finance current expenditure. So working capital formula is just the difference between the current assets and the current liabilities. So the difference for that is, ito na po yun, nalagay na natin, no? Ayan, so minus lang po ang current assets minus current liabilities. Same with 2018. So for the difference nilang dalawa, mas malaki ang working capital ni 2019 versus kay 2018. Meaning to say, if ever na meron silang bigger investments na gustong i-acquire, so pwedeng mas capable itong 2019 compared sa 2018. So that is the working capital. Meron silang ganung kalaking fund na available to finance their expenditures. Okay, so ayan, nauna na tayo. Ngayon niya palang inutos gawin, nauna na tayo. So for the answer, ayan, ang tanong kasi, what year does the EMP has the higher working capital? So basically, answer is 2019. 36,687. Although 2019 kasi ano lang to first quarter pa lang ito. Hindi wala pang end year yung report. Ayan, ended 31 pa lang March 2019. Itong 2018 is yung last na part na ng year. Anyway, so ayan, tama naman tayo so far. Next, we have the quick ratio. When we say quick ratio, measures the ability of the entity to pay its current liabilities using its quick assets. Guys, when we say quick assets, this is just the cash and cash equivalents, marketable securities, and accounts receivable. Nasaan po yun dito? Let's check. Cash and cash equivalents. Okay, meron tayo. Marketable securities. Nasaan yun? Marketable securities, actually, when we say marketable securities, this is also the financial assets at fair value through profit or loss. That's why it is called marketable. Yung marketable securities, nasaan po yun? Ito, financial assets at fair value through profit and loss. So, dalawa na ang meron tayo. Next, accounts receivable. Nasaan ang accounts receivable natin? Accounts receivable is also the trade and other receivables net on the balance sheet ng Emperador Corporation. Nasaan po yun? Ito. So, meaning to say, ang quick ratio is the summation of these first three part of the current assets divided by its total current liabilities. Ibig sabihin, hindi ito ang kukunin mo na total current assets. Ito lang, yung tatlo lang na to. Mababawasan ito. Okay, so let's try. Cash and cash equivalents, year 2019. So, paste. Trade and other receivables. Copy and paste here. And financial assets at fair value through profit or loss or the marketable securities, year 2019. Paste. Okay, current liabilities. Kopyahin natin dito. Equals na lang natin. Same lang naman sila ng content sa unang computation. So, equals natin current liabilities dito. Okay, now, formula. Wait lang, agatin siyang 12. Again, ang formula based sa ating PowerPoint presentation, this is summation. So, you can see, summation ng tatlo, yun yung inad over current liabilities, B14. So, ang quick ratio for the year 2019 is 1.21. For the year 2018, same process, copy-paste. So, let's copy this for the year 2018. Okay. Trade and this other receivables net. Here. And this one. Financial assets or the marketable securities. Paste. For the total liabilities, current liabilities for the year 2018, copy. And paste. Okay, so we're here. Okay, now, guys, as you can see, same ng formula. Ayan, summation ng tatlo over the current assets. Now, anong masasabi natin dito? 1.21 is smaller than 1.30. So, mas maliit yung value ng 2019 over sa 2018. Now, let's check kung ano ba yung inuutos sa atin sa quick ratio. Using the EMP financial statements, solve for their quick ratios. Na-solve na natin, no? With regards to their quick ratios, what year is the most risky? Again, when we say quick ratio, yung kakayahan nila na magbayad ng liability nila using its quick assets. Itong quick assets kasi, these are the assets na mabilis ma-turn into cash. No, mabilis siyang itong inventory kasi, yes, you can convert this into cash, pero hindi ganoon kabilis, no? Illiquid siya. Inventories yan nasa goods yan. No, pwedeng solid yan. And of course, ng prepayments, di mo naman pwedeng madaliin yung mga prepayments na yan. So, itong tatlo lang. Ano daw yung most risky? Of course, the most risky is the year 2019 dahil siya yung mas maliit na quick ratio. If ever man na kailangan nila magbayad, no, next month agad-agad, medyo risky yung financial position nila during year 2019. May possibility na di sila makapagbayad. Yes, there is, compared to 2018. Pero since higher than 1 naman, hindi naman ganun kalaki yung chance, no? Basta higher than 1. Man na yan, medyo delikado na yan pag nag 1:1. Oo, delikado. Kasi ang kino-compare natin is again, yung mga quick assets versus sa total current liabilities. Okay, so that's it. Check natin kung tama tayo. Answer year 2019. Yes, so we are correct because the quick asset or the quick ratio during the year 2019 is smaller than 2018. This is the computation. So 1.21 and 1.13. Now, can you draw a conclusion about current ratio versus quick ratio? Yes, no, we can. So, balik tayo sa Excel. So, dito, sa current ratio natin, if you can see, from 2.73 current ratio, naging 1.21 pagdating sa quick ratio. From 2.77 current ratio year 2018, naging 1.30 quick ratio year 2018. Meaning to say, bumaba yung quick ratio. Bakit bumaba? Kasi nga, no, sa ating financial statements, ang kinukuha natin for the current ratio is the total current asset, while for the quick ratio is just the first part of the current assets, first 3 parts of the current assets. That's why mas lumiit siya. No, ayun ang pinagkaiba nila. Okay, so next is the cash ratio. So cash ratio is a variation of quick ratio. This tests the liquidity without relying on accounts receivables and inventories. Halimbawa, ito yung mas mabilis Kailangan mo talagang magbayad, no? Sinisingil ka na ng pinagkakautangan mo na company and wala ka. Ito yung parang wag ka umasa doon sa receivables mo. Kung ano yung meron ka ngayon, sige, ayun yung pambayad mo. Mas mabilis yung demand niya. Ayun yung cash ratio. Kaya siya tinawag na cash. Kung ano yung liquid mo ngayon mismo, yung cash mo mismo na nandyan, that's it. Now, using the EMP financial statements, solve for their cash ratios. With regards to their cash ratios, what year is the most risky? So, as you can see, the formula for cash ratio is just the cash and cash equivalents plus marketable securities over current liabilities. Nawala ang ating accounts receivable. Pareho ang quick ratio, wala lang accounts receivable. So, let's go back to our Excel. Again, pareho sila, wala lang accounts receivable. So, I have here the values. Copy-paste natin ito for year 2019 and 2018. Marketable securities. Copy-paste ulit, year 2019 and 2018. Same with current liabilities. Copy-paste, year 2019 and 2018. So, ayan. Nakuha na natin, no? Again, summation of these two over current liabilities. Same with year 2018. Summation of these two over current liabilities. As you can see, guys, 8.14 ang cash ratio for 2019 and for year 2018, we have 0.37. Ang question is, what year is the most risky? So, risky itong ating 2018, 0.37 versus 8.4 ng 2019. First time na bumaba tayo ng 1. As you can see, ayan, bumaba ng 1, 0.37 lang. Ibig sabihin, kapag itong mga liability mo amounting to 20 billion, 217 million, kapag ayan, naningil lahat, tapos mabilisan yung demand, next week agad, next month agad, kung ano yung cash mo, pag sa cash ratio ka titingin, alanganin tayo, year 2018. baka di natin kayang mabayaran dahil napaka-liit lang nito compared dito sa current liabilities na yan. Now, I hope you get it. That is the essence of cash ratio. Okay? So, answer here 2018 because 2018 cash ratio is smaller than 2019. 0.46 versus 0.37. Oops, bakit naging 8.14 ito? Ano ba ang current liabilities na to? 21 to 14. Okay, so, ito, mali ang ating na-copy. Okay, so, check natin ha. 21 to 14. Ayun. Current liabilities. Quick ratio. Ayun, no? 0.46. Mas maliit pa rin si 2018. No? So, still, tama pa rin tayo. 46 versus 37. Okay, now, can you draw a conclusion about current ratio versus quick ratio versus cash ratio? I hope nakuha nyo na. Si current ratio, ang kanya is yung kabuang current assets ang gamit. Divide current liabilities. Ito. No, si second one, si quick ratio naman, hindi current assets. Itong tatlo lang, cash and cash equivalents, trade and other receivables or yung mga accounts receivables, financial assets at fair value through profit or loss or ito yung tinatawag natin na marketable securities. For cash ratio, wala siyang kasamang receivables, tanggal ito. So, itong dalawa lang divided by total current liabilities. So, meaning, mas maliit sa tatlo si cash ratio, pangalawa si quick ratio, pinakamalaki si current ratio. That is the difference between these three. Okay? So, next part of our liquidity ratios is the cash to current assets ratio. So, this measures a company's liquidity basing how liquid a company is by its cash and cash equivalents and marketable securities alone. So, using the EMP financial statements, solve for their cash ratios. With regards to their cash to current assets ratios, what here is the most liquid? When we say liquid, guys, this is the ability of a certain asset or certain thing na ma-turn into cash, no? Ma-turn quickly into cash, maging pera siya. That is the liquidity. Yung tinatawag na liquidity. Okay, so let's solve for the cash to current assets ratio ng Emperador Corporation Incorporated 2019 and 2018. Okay, I have here the template. So, cash and cash equivalents. Pareho na rin dito. Equals dito. Same lang naman yan. And ito rin. Copy din natin sa taas. Cash and cash equivalents. Marketable securities. Copy natin dito. Okay. And ito. So, for current assets, let's copy this. Current assets. Equal sign muna. Then, our current assets, we have here. Okay. Then, copy natin for 2018. Yan, no? Cash to current assets ratio. Summation ng dalawang to divided by current assets. Same with 2018. Inad, cash and cash equivalent and marketable securities over itong current assets natin. So, here, since this is a cash to current assets ratio, again, this is the measure how liquid is the company, no, basing how liquid a company is doon sa cash and cash equivalents. So basically, ang answer dito is year 2019. Tama ba tayo? 0.17 and 0.13. Dahil no, ang year 2019 is mas malaki yung cash to current assets ratio niya compared to year 2018. Meaning, mas liquid sila in terms of cash and cash equivalents plus the marketable securities. That is the cash to current assets ratio. So, if the liquidity on cash to current assets ratio is not enough, what could what could be the management's better way to do? Halimbawa, hindi nag-cash itong cash and cash equivalents tapos marketable securities. Ano yung pwede natin gawin? If you look on the financial statements, especially sa ating balance sheet, no? Kapag hindi nag-cash yung cash and cash equivalent saka yung marketable securities, itong financial assets saka itong, ano yung pwede natin gawin? As you can see, big part of the total current assets is the inventory. No? Ayan, 30 billion, 28 billion ng 2018. Malaking part yan. And, kung titignan po natin, pwede natin ito ma-change into cash. If ever lang na hindi na wala talaga, no? Gawa tayo ng paraan para ma-change to into cash. If the 50% of inventories, ito na, ayun, tama tayo, nagbigay na siya ng condition. If the 50% of inventories for the year 2019 will be converted into cash based on their balance sheet, what will be their new cash to current assets ratio? Yung 2019 lang yung pinapapalitan, no? So, check natin, ano ba yung inventory? Itong 30 billion na yan. Let's copy this. And, ito siya, original. Tapos, 50% times 0.5 para mga lahati. Okay. And, as you can see, the cash to current assets ratio is now, ang ginawa natin po is, dinagdag natin itong inventory na 50% doon sa ating marketable securities and cash equivalents. Kasi yun yung condition na binigay over sa B28, which is the current assets. Malamang, since nadagdagan yun, lumaki din yung ating cash to current assets ratio. Naging 0.43 sa year 2019. Ayun siya. Next. Ayun yung, ayan. So guys, ginagawa lang yun. Pwede ka magbenta ng inventory mo, kung ano man yan, kung raw man yan, or finished na, bahala kayo. Basta you try to convert those things into cash. So, ayun yung idea dito. Kaya yun na naitanong. Okay, so for the next part, we have now the solvency ratios or si debt management ratios. When we say debt management ratios, guys, this is the measures of the ability ng entity to pay its long-term obligations on a continuing basis, sometimes called debt management ratio. Long-term no obligations lagpas 1 year. Kapag current kasi less than 1 year. So long-term obligations lagpas 1 year. Ano yung mga ratios na under dito sa solvency ratio? So for the first one, we have the debt ratio or the debt to assets ratio. Ito yung formula, mamaya isa-isayin natin. We also have the equity ratio or the equity to assets ratio, debt to equity ratio, and the last one, the cash flow to total debt ratio. Now let's have the debt ratio first. So debt ratio measures the relative share of creditors over the total resources of the firm, also known as debt to assets ratio. Ano daw po yun? English kasi, Tagalogin natin, no? Ito yung kung kumbaga gaano kalaki yung ambag ng mga creditors sa total resources natin ng corporation. No, ilang percent yung from creditors. So using the EMP financial statements, so for their debt ratios, and with regards to their debt ratio, what year when the creditors have larger relative share over the total asset of the corporation. Again, the formula is total liabilities over total assets. So let's have the total liabilities ng year 2019 and 2018. So total liabilities, guys, don't be confused sa total current liabilities tsaka total non-current. Pagsamahin yung dalawang yan. Ito, I hope you're familiar with financial statements para din nalilito. Ito, Kung hindi man, ito po, in-explain ko siya. Ito plus ito is equals ito. Ang kailangan natin is not the current, not the non-current, but rather the total liabilities. Ito po, yung 56th na billion, 632,746,520. So, let's copy this. Total liabilities. Here, we have here. Ayan. For the year 2019, solvency ratios na tayo. For year 2018, copy-paste din natin ito. Ayan. And for the total assets, so, same doon sa kanina, total assets is the total current assets and the total non-current assets. So, total assets ang meron tayo. Copy-paste natin, 2019 and 2018. Okay, so 12. Okay. Now, ang question is, at what year yung creditor may mas malaking relative share over the total assets? Of course, since we have down the formula, divide lang naman ito, 47 versus 0.48. So, basically, mas malaki yung share ng creditors during the year 2018. No? Ayan, medyo mabigat na to. Almost half Almost 0.5. Halos kalahati ng total na ari-arian ng company is actually galing sa mga creditors. So, if ever na maningil sila, tapos agad-agad, delikado. No? Ayan, next. Answer, 2018. So, tama tayo. Because the 2018 debt ratio is greater than 2019. Ito siya. Okay. So, in a bird's eye view perspective, does the computed ratios acceptable? And why? So, acceptable sila somehow dahil hindi naman lumagpas ng 50. No? And, kung titingnan nyo, from 2018, 0.48 ang debt to assets ratio natin. Bumaba siya ng 2019, although this is just a first quarter ng 0.47. Acceptable somehow dahil nababawasan ang liabilities. Yun yung over the total asset versus the total asset. Doon yung titingnan sa ratio. Kasi pag tinignan nyo, 56.4 million versus 56.6, mas malaki talaga ang 2019. Tumaas ang liabilities nila. Pero in fact, tumaas din naman kasi yung asset. No, from 117 billion going to 120 billion. So meaning yung ratio nila, itong divide na to, ito yun. Itong divide ng dalawang, ito yun. Kaya mas bumaba pa rin somehow yung 2019. So in a bird's eye view na perspective, naging okay. No? Kasi lumiit yung debt to assets ratio ng 2019. Okay, I hope you get it. Next, we have the equity ratio. So, equity ratio measures the relative share of shareholders over the total resources of the firm or the amount of assets by owners' investments, also known as equity to assets ratio. So, ito yung kung gaano kalaki yung share ng owner sa total na value ng firm. Formula, total equity over total asset. So, solve natin yung equity ratio. Total equity over total asset. Total equity is, we have here, for 2019, copy-paste, ito. And for 2018, total equity. Okay. Total assets equals natin dito. Ayan. And of course, pwedeng siyang 12 font size. Okay. So, tingnan natin, no? Equity, divide lang po sila. Equity over assets, same with 2018. Question, ano ba ang tanong? Solve further equity ratios. Walang tanong. No-solve lang. Di solve. Ayan, tapos na po. 0.53 and 0.52. So, answer, ayan. Meaning to say, walang tanong no? Meaning, mas malaki yung part na pag-aari ng owner sa buong firm during 2018 compared to during 2019 compared to 2018 from 0.52 to 0.53. Okay, so ayan, ito yung question. From 0.52 is to 1 year 2018 to 0.53 is to 1 for the year 2019. Does it indicate sound financial condition of the corporation? Yes or no? Actually, guys, in the perspective of the owner, okay yun sa kanila. No, pero sa perspective na as a whole, medyo hindi dahil yung ownership is lumalaki doon sa owner. Dapat kasi ito marami ang nagmamay-ari. Sorry. Kasi nga korporasyon na ito. No, ayun. Pero still, this is subjective, depende sa kung anong meron tayo na ina-analyze natin and for what reason. No? So, can you draw a conclusion about debt ratio versus equity ratio? So, let's go back to our Excel for us to have the conclusion. Debt ratio tsaka equity ratio. Debt ratio, ito yung mga mga liabilities, no? Yung creditors versus sa total asset. 0.47. Sa equity ratio naman, 0.53. So, kung titingnan ninyo, ito yung perspective kanina na regarding doon sa unang tanong. No, from yung pagmamay-ari ng creditor from 48 to 0.47 bumaba. No, and since bumaba yun, connected yan dito sa equity ratio na from 0.52 umangat naman ng 0.53. Meaning, debt ratio is inversely proportional to the equity ratio. Again, debt ratio is inversely proportional to the equity ratio and they should be equals to 1. 0.47 plus 0.53 is 0.47 plus 0.53 is equals to 1. Ayan, exacto 1 sa baba. Same with 0.48 plus 0.52. 100%. So that is the relationship of this debt ratio and the equity ratio. Okay, so debt to equity ratio naman tayo. Debt to equity ratio measures the percentage of total funds provided by creditors compared to owners. Sino yung mas malaking naiambag na fund? No, yung creditor ba or yung owner? If that is the question, that can be answered by the debt to equity ratio. So, formula is total liabilities over total equity. So, using kapag ito, naglagpas ito ng 1, no? Pag naglagpas ito ng 1, mas malaki yung sa total yung sa creditors. Kapag naman lower than 1, mas malaki yung ambag na fund ng mga owners. Ayan lang naman siya. So, let's compute. As you can see, guys, debt to equity ratio, this is the debt ratio, this is the equity ratio. Kumbaga, parang kinumbine mo lang sila, canceled yung total assets. That's why total liabilities over total equity. Kumbaga, dinivide mo yung debt sa equity. So, ito, total liability and equity. Ayun yung nangyayari. Total liabilities over total equity. So, using the financial statements ng EMP or the Emperador Incorporated, solve natin yung debt to equity ratios nila. And provide natin comparative analysis. So, ito, debt to equity ratio. So, for the total liabilities, equals, then copy paste. Equals na lang para makopy. Copy natin dito sa 2018. For the total equity, ito po siya. Then, copy. Okay, so divide lang yan. Ano pong ibig sabihin? Nung year 2019, mas malaki ang fund na share ng creditors. Dahil 0.92 ang ratio natin versus sa owner. Bumaba nung year 2019. 0.89 na lang. Kasi nga dito sa ating debt to assets ratio na bumaba rin. So almost nagja-jive yung mga numbers natin. And since bumaba itong debt to equity ratio, tumaas yung equity natin, equity ratio dito. No? So dapat nagtutugma-tugma yung mga numero dahil sila din naman yung mga given, no? So, ayun yung analysis natin for this. So, answer is 0.92 to 0.89. So, we are correct. Okay, so debt to equity ratio decreases from 0.92 is to 1 that year during the 2018 to 0.89 is to 1 in year 2019 because Emperador Incorporated lessened their liabilities relative to their equity. Yun na-explain ko kanina, which expands more. From year 2018 to 2019, which is also supported by a decrease in debt ratio and an increase in equity ratio. Di ba na-explain ko? Connected sila. Yung nangyayari dito sa debt to equity ratio, nangyayari din sa equity tsaka sa debt ratio. Yung pagbaba nito, yun din yung pagtaas nitong equity ratio. And kita rin siya sa pagbaba ng debt to equity ratio from 0.92 to 0.89. Okay, so that's how financial ratio analysis is performed. Next, we have this cash flow to total debt ratio. So, cash flow to total debt ratio, this is the ratio that measures the part of total liabilities that can be paid out of the net cash flow from operation. So, using the EMP financial statements or the Emperador financial statements, solve for their cash flow to total debt ratio and provide a statement on what year does EMP has more cash inflow from operating activities to pay its long-term obligations. Again, when we say cash flow, we have different cash flow. Balikan natin yung basic ng cash flow. Cash inflow from operating activities, cash flow from financing activities, and cash flow from investing activities. So, for this cash flow to total debt ratio, ang titingnan lang natin is the cash flow from operating activities lang. So, hindi kasama yung financing and yung sa investing. Now, for the net cash flow from operating activities, we have here, check natin, net cash flow, dun tayo titingin sa sa cash flow. This is income statement This is statement of changes naman in equity. Ito ang cash flow natin. So, net cash flow from operating activities, year 2019 is ito. And for year 2018 is ito po. So, copy-paste. Let's have, nasaan na? Ito. Copy. Let's copy this. You can do that merge cell. Naka-merge yung cell. Sige, dito na lang muna. Ayan. Tapos, ito. Naka-merge kasi ito. Ayan, dalawang row ang nasakop nito. Ayan, i-copy na lang natin dito. Diba? Mautak. Ayan, total liabilities natin. Same dun sa taas. We have total liabilities 2019. Ito siya. For 2018, ito po. Ayan. Okay. So, divide lang sila. That is the cash flow to total liabilities ratio. So, as you can see, guys, ang mas malaki is the cash flow from operating activities over total liabilities ng 2019 or the cash flow to total liabilities ratio, 0.06 compared to 2018 na meron lang tayong 0.04. Ayan. So, for the answer dito, provide a statement on what year does EMP has more cash inflow from operating activities to pay its long-term obligation. Of course, yung mas mataas. Itong 2019. Ayan. Answer natin is 2019. Mas malaki kasi. 0.06. Meaning, guys, mas may kakayahan silang bayaran yung total liabilities nila na ang panggagalingan ng pera is yung operating activities. No, yung net cash flow from operating activities. Sorry for the typographical error dito. Ayan. So, that is the cash flow to total debt ratio. Okay, so let's move now to the third financial ratio analysis, which is the operating ratios. When we say operating ratios, this is actually the measures of the ability of the entity in performing its operations or day-to-day business activities in efficient manner. So, a factor ultimately related to profits. If you are efficiently performing, of course, the profit will follow. Now, operating ratios have, actually, in our example, we have here three ratios. So, we have the inventory turnover, the average age of inventory, and the flowback ratio. So, first one is the inventory turnover. When we say inventory turnover, this is the measure on how many times a firm's inventory has been sold and replaced during a year. No, ilang beses umikot, no, ilang beses nagpalit yung cycle sa isang taon, ilang beses napalitan. It shows how fast inventories are turned into cost of sales. So, using the Emperador financial statements sold for their 2019 inventory turnover and interpret the result. So, ang gagawin lang natin is yung year 2019. So, formula is cost of sales over average finished goods inventory. So, let's go to our financial statements. Let's look for the cost of sales. So, more likely, itong cost of sales na to, check natin, no? Ito. Under siya ng consolidated statements of comprehensive income or also known as the income statement. So, here we have the cost of goods sold na 7,083,155,559. So, let's copy this. Let's paste this sa ating next na ratios, which is the operating ratio. So, cost of sales and the average finished goods inventory based on our formula, that is the average finished goods inventory. So, for the finished goods inventory, let's check what financial statement natin siya pwedeng makita. Here, no, we have the non-current assets. So, the average finished goods inventory is this. Inventory is net na. Though, hindi siya average dahil we have only 1 year. So, ito na yung makonsider natin as the finished goods inventory. No, yung net na. 30 billion, 207,444. So, ayan. Let's write it here. And 0.23 ang naging output. Nag-divide lang yan. Ayan, divide lang sila. Average ng finished goods inventory, kailangan din natin makuha pala si 2018. Ayan. Kaya siya tinawag na average. Itong cost of sales, no need na. So, yung 2018, ito. Ayan. So, paste natin. Okay, so the answer is 0.24. Now, what this 0.24 means? Check natin kung tama tayo. Ayun, 0.24. Ibig sabihin, sa isang taon, nung umikot yung inventaryo nila, 0.24 times lang, hindi pa umabot ng 1. Ibig sabihin, kung meron tayong ganitong amount of stock ngayon, hindi siya napalitan lahat, no, totally 100% sa loob ng isang taon. Medyo mabagal. Though, I'm not into the historical data ng Emperador. Wala akong data ng historical kung paano ba yung movement nila, kung normal lang ba to or mabagal na ba to. Pero yun nga, hindi umabot ng 1. Hindi napalitan lahat ng stocking level nila. Malamang ito, marami sila sa warehouse na naka-stocks, no? Amounting to 30 billion. Napakalaki yan. 0.24. Ibig sabihin, for them to be able to have the complete cycle, no, yung complete na 1 turnover of their inventory, they need to wait 4 or more years, no, para makomplete lang yung 1 inventory turnover. Anyway, so that is the average age na tayo. Average age of inventory measures the number of days it takes a firm to sell the entire or average inventory, also known as average sale period. Formula niya is 365 days, dahil magkanya siya 365 days sa isang taon, over IT or the inventory turnover. So using the EMP financial statements, solve for their 2019 average age of inventory and interpret the result. So average age of the inventory 2019, ito na-complete na siya. 365 given from the formula. So 0.24 ang inventory turnover, dito po siya nang galing. And average age of inventory, divide lang natin siya. So 1,509.94. Ano ito? No, ang unit po nito will be days dahil days ang number of ang 365 number of days in a year. Ayun yung gamit natin sa taas. So this is 1,509.24. Ito yung average na tinatagal ng inventory nila sa kanilang warehouse. Ganyan katagal. Okay. So let's go back to our PowerPoint presentation. Ayan, tama naman tayo. Okay. So, the flowback ratio. Ano naman ito ang flowback ratio? Flowback ratio measures the percentage of net profit available for reinvestment. Gaano karami yung natirang pera na available for reinvestment nila sa mga next na plans nila. So, suppose Emperador Incorporated doesn't yet issue dividends to their shareholders this year. Based on their financial statements, what will be their 2019 flowback ratio? Okay, and explain. For some of you who doesn't know what is dividends, ito po is a moral obligation ng company to pay some amount sa kanilang mga shareholders. This is not required, no? Not required sila na magbigay nito, and any amount ito, of course may basis na computation, pero hindi ito dapat expect ng mga shareholders every year dahil may mga years din naman na hindi nagbibigay yung company. Depende sa income kasi. Kapag medyo malaki yung income, then they can issue dividends. Ayun siya. So, flowback ratio, amount available for reinvestment over the net profit. So, let's have our example computation. Let's go now to our financial statements. We don't have any amount available for reinvestment sa ating financial statements. What will be the amount na gagamitin natin ngayon dahil wala naman? Ang amount available for reinvestment po is the net profit minus dividends. And since meron siyang binigay dito na condition na hindi pa nag-i-issue ng dividends to shareholders this year, based on their financial statements, ano yung 2019 flowback ratio? So, meaning to say, ang dividends natin dito will be 0. So, actually, the net profit natin dito, which actually came from the income statement, ito, ang ating income statement. Let's see, the net profit, ito po. Kopyahin natin ito. Then, wala tayong ima-minus dahil wala naman tayong dividends for this year. So, ayun, nag-0 siya. Nalagay ko na. Yung net profit, meaning to say, J17, please check the formula, guys. J17 is this blue one. So, net profit minus the dividends. Since 0 ang dividends, tapos divide ulit siya sa net profit, anong nangyari? Net profit divided by net profit, meaning we have 1 as the flowback ratio. So, ayun yung nangyari since wala tayong dividends. So, let's go back to our PowerPoint. Ayan. 2019 flowback ratio will be 1. Again, this is the measure in percentage of net profit available for reinvestment. Ibig pong sabihin, yung kinita nila during this time, na 1 billion, 742 million, etc. This is all available for reinvestment nila sa mga future plans nila. 100%, hindi nabawasan. Ito yung papampaikot ulit nila. That is the flowback ratio. Okay? So, next, I think we can now move sa ating profitability ratios. So, profitability ratios, this is the ratio that measures the ability of the entity to generate profit in relation to sales, assets, equities, or ordinary shares outstanding. So for the profitability ratios, we have the gross profit ratio and the net profit ratio. So for the gross profit ratio, this shows the percentage of sales revenue a company keeps after it covers all direct costs. Take note on the term, guys, all direct costs associated with running the business, while the net profit ratio measures the after-tax profit per 1 peso of sales. So let's have an example. From the given EMP financial statements or the Emperador financial statements, complete their profitability ratios and provide a comparison between gross profit ratio and net profit ratio. So again, ulitin natin, no? Gross profit ratio is gross profit over net sales. So check natin dito, ano ang gross profit ng Emperador Corporation. So, gross profit, eto, gross profit is equivalent to profit before tax. Guys, take note, ulitin ko ha, gross profit is equivalent to profit before tax. That's why it is called gross, not net. Ito yung net profit, yung neto, yung tawag, 1.7 billion. So, i-copy natin itong itong profit before tax. Ito, take note kayo ha. Shows the percentage of sales revenue a company keeps after it covers all direct costs associated with running the business. Direct cost lang yung kinover, no, itong mga costs and expenses na yan. Revenue minus yung total neto, ito yun. Ayan, hindi pa kasama yung tax kasi indirect naman yan. Copy natin ito. So, dito tayo, fourth ratio. Paste. And ano pa yung pinapasolve sa atin? Okay, isama na natin pati 2018. Okay. And the net sales or the revenues. Ano yung net sales natin? The net sales or the revenue is this one, the net profit, no? 11, net sales, revenues, ito, yan, mas malaki. That is net profit, not net sales. Net profit is may bawas na tayo kung ano-anong mga dapat ibawas ng mga costs and expenses. This is 11. Ayan. Next, sa 2018, copy and paste. And let's get this 12. Ayan. So, ano pong ibig sabihin nito? No? Check natin yung answer if we are correct. Gross profit ratio 0.18, 0.19, 1832, 1941. Ayun, tama. Anong ibig sabihin nito, guys? Nasa gross profit ratio pa lang tayo. Ibig sabihin, mas maliit yung gross profit ratio ng 2019 compared sa 2018. No? Ayun siya. Dugtungan muna natin. Tapusin na muna natin itong net profit ratio para ma-compare natin. For the net profit, ito na yan. 1.7. Paste. 2018. Ito. Then, paste. Net sales or the revenues ulit. Ito po yan. 11 billion net sales. Or, ito na lang pala. I-copy na natin dito. Equals na lang. Same lang yan, ha. Baka malito kayo. Yung iba sa inyo, alam ko, hindi pa familiar sa Excel. Start yourself to be familiar sa Excel, guys. Kailangan nyo yun. Ito yung comparison natin. 0.16, 0.17. 1581, paano yan nakuha? Sorry. 1581. Ayan, ginawa lang siyang fraction. Ano po ito? Anong ibig niyang sabihin? Now, if we will check sa PowerPoint presentation, parehong-pareho lang tayo ng naging answer. Ibig sabihin guys, yung gross profit margin na yan, 18.32 and 19.41, malaki yung chance na liliit siya dahil dito sa net profit ratio and sa net profit margin na yan is less yung taxed. Kasi nga, babalikan natin, net profit ratio measures the after-tax profit in every piso na sales nila. Magkano yung after-tax na profit nila. When we say after-tax, deducted na yung tax. No? And sabi doon, 0.16 saka 0.17 after-tax profit sa kada piso. No? And ayan, mas maliliit kapag naka-net profit ratio tayo. Okay, so that is the profitability ratio. So next, the last one, we have now the shareholder ratios. So shareholder ratio, this is the growth ratio. This measures the entity's performance and returns on its share capital. The shareholders ratios are indicators of the firm's potential and attractiveness as an investment option. So, baka nalito kayo, ano ba yung shareholder? Kanina ko pa binabanggit. Ito po shareholder, ito po yung mga may-ari ng company. So, actually, you can be a shareholder if you wanted to own a company, no, just invest in specific company, no, sa stock market. Ito guys, if gusto nyo, no, just open an account sa broker, tapos mag-buy lang kayo, no, online platform naman na tayo, kung anong share of stocks ng company na mapili nyo, pwede po yun, no, and ito yung usually, tinitingnan ito ng mga investors, itong shareholder ratios, if you wanted to be an investor sooner or later. So, ito yung mga ratio na kakailanganin mo i-check. Una, we have the BEPS, or the basic earnings per share. Next, we have the earnings yield, dividends per share, the dividend yield ratio, the price earnings ratio, or what we call the PE ratio. Maraming gumagamit nito. And the payback period. Now, let's try to differentiate isa-isa sila and define natin kung ano and paano kinukuha. Pinakauna, the basic earnings per share, or the BEPS. This measures the net profit available for ordinary shareholders on a per share basis. So using some data below and the EMP financial statement, complete the table. Wow, complete pa lang. Nautusan pa. Complete the table. Sige, complete daw natin. Ayan. So we have here preferred dividends, 4977097, 4977097, 1661 461 900, 15984,573, 15984,573, 614. 2018, 16188,433, 634. Okay. Now, let's complete this based on the formula ng basic earnings per share. Balikan natin. Basic earnings per share daw is net profit minus preferred dividends. Meron pa tayong net profit. Wala, pero may preferred dividends. Ang net profit ng 2019, we can get it dito sa mga nauna nating data. So, ito, equals lang. Tapos ito, net profit, ito yan ang 2019. Ayan. Okay, and formula niya, di ba? Net profit minus preferred dividends over the average number of ordinary shares outstanding. Itong average number of ordinary shares outstanding po, this is the amount of shares available sa public to be traded in the secondary market, sa stock market. No, ayan siya. So, divide lang, meaning basic earnings per share is 0.11 for year 2018. Now, for year 2019. Okay, so for the preferred dividends, it is actually can be seen on the comprehensive income no statement or the income statement. Dito siya sa bandang baba. As you can see here, we have the net profit attributable to owners of the parent company and to the non-controlling interest. So, wala tayong pakialam dun sa owners of the parent company dahil that is not a dividend. And dividend is binibigay siya sa shareholders non-controlling interest. Meaning to say, for the year 2018, ito ang ating magiging preferred dividend. 76,589,461. So, let's copy this and paste natin sa ating Excel. Ayan yung value niya ngayon. Now, same tayo ng formulang ginamit. Now, we have net profit minus preferred dividends over average number of ordinary shares outstanding, which is itong 16,188,000,000. So, as you can see, guys, basic earnings per share is higher sa year 2019 compared to year 2020. Now, anong implication nito? Let's go back to our PowerPoint presentation. Tama ba tayo? Point 10 and point 11. So, ayan, tama naman. Ulitin natin, no? BEPS is the measures of the net profit available for ordinary shares on a per share basis. Meaning, in every share na meron kang hawak sa Emperador Corporation, Emperador Incorporated, is meron kang net profit na makukuha na 0.11. So, ayun yung ibig niyong sabihin. In every share, that is the basic earnings per share. Mas tumaas nung 2019, meaning mas attractive ito as an investment option. Itong Emperador, kung ang comparison natin is by year. Year 2018 versus 2019, mas naging attractive siya as an investment option. Dahil again, when we say shareholder ratio, diyan kabilang ang basic earnings per share. This is the measures of the entity's performance and returns on its capital, on its share capital. Ayan, no, sabi dito, indicator siya kung gaano ka-attractive yung company as an investment option ng mga shareholders or ng mga investors. Alright, I hope nakuha ninyo yun. So, next tayo, earnings yield naman tayo. Earnings yield measures the relationship of earnings per share to the market price per share. Yung nakuha natin na earnings per share natin, diba, yung EPS natin, ano yung EPS natin? Ito, naka-equal na doon, no? So, equals dito. Yung EPS na yan, divide natin sa market share na meron tayo ngayon. Guys, when we say market share, this is the current price or the market share tuloy, market price. This is the current price of a specific stock. In our case, that is the Emperador Corporation sa specific time. So, assuming today is July 5, 2019. Kanina, kunyari, 3:30 p.m. Kunyari, ngayon yan. Market closing price ng stock ni EMP is 7.62 pesos per share. Compute for the earnings yield for the year 2019 gamit yung EPS na na-compute natin kanina. So, meaning to say, EPS divided by 7.62. So, let's write it here. 7.62. Ang earnings yield is 1.43%. Okay, so let's check kung tama tayo. Ayun, 1.43%. Meaning to say, ito yung relationship ng earnings per share sa market price na meron tayo. Nag-iiba-iba to no, every second, every minute as long as the market is open from 9 ng umaga, 9:30 ng umaga hanggang 3:30 ng hapon or 3 p.m. Yun siya, no, nag-iiba-iba. Depende sa current na demand ng market and of course sa supply. Basic ng economics ito eh. No, demand and supply. Lagi yan nag-move. So, currently, we have 1.43% as the earnings yield. Now, we have now the dividends per share measures the portion of income distributed to shareholders on a per share basis, kada isang share. No, gaano ka-distributed, magkano yung income na dinidistribute nila sa shareholders. That is the dividends per share. For the dividend yield ratio naman, this measures the ability of the firm to return the investments to owners in terms of dividends. not in terms of accrual net profit. When we say accrual net profit, paper gain, ito is hindi pa siya realized. Magkaiba yun guys, no? When we say paper gain, floating pa siya sa market, hindi pa closed yung trade. No, versus sa versus sa realized gains. Pag realized gain, na-close mo na yung trade, tapos nasa account mo na mismo yung money and realized na siya, no, na-close na kasi tapos na final na yon yung amount na yon. Kapag paper gain kasi pwede pa siya maging loss, paper gain or paper loss, depende sa current floating market condition. So that is the dividend yield ratio. So a company reported 8 million common shares outstanding with 4,977,097 pesos dividends paid and a 7.62 prevailing market price per share on stock market. What is their dividends per share and dividend yield ratio? So dividends per share is the dividends paid or declared over the number of ordinary shares outstanding. The dividend yield ratio is the dividends per share over the market price per share. So, tingnan natin. Ito siya. No, upon computation, dividends paid, we have ito 4.98 million. So, divide lang naman ito. Oops, wala. Ayan, divide lang naman. We have 0.62 na dividends per share. Meaning, in every share na meron tayo kung anumang company to, in our case, that is EMP, we have dividends na 0.62 cents in every share. Ganun ang ibig sabihin. Baka meron akong 2 share of Emperador Corporation, multiply mo sa 0.62. Ayun yung amount na mabibigay sa'yo, no, as dividends. Dividend, parte mo yun. So, EMP dividends yield ratio. So, dividends per share, ito po yun, 0.62. And yung current market price na binigay kanina, 7.62 at 3 p.m. yun, if I'm not mistaken. Divide mo lang yan and it will be 8%. Meaning to say, at the current market price na level, no, you can have your dividend yield ratio na 8%. Medyo malaki na yun. No, kasi ano siya, ito, 0.62 versus 7.62. Medyo malaki na guys. Actually, attractive siya somehow as an investment option. Okay, so this is the last ratio, I think. So, the PE ratio. So, PE ratio measures the firm's ability to recover investments from earnings. So, the PE ratio helps investors determine the market value of a stock as compared to the company's earnings. So, madalas ito gamitin ng mga investors, mga long-term investors. Dito sila tumitingin kung ano ba yung mga attractive na company. Ito, gagawin natin ito. Check natin sa ating example. So, generally speaking, a high PE ratio means that investors are anticipating higher growth in the future. Mas magandang PE ratio, mas mataas na PE ratio, mas maganda yung possible na growth ng company in the future. So, if you have 136,000 and given a task to find the best company to invest in, what company will be your best choice using price earnings ratio? So, market price per share, ito po yung mga yun. Tapos, earnings per share ng mga company, ito, given na siya guys. So, given na yung market price and earnings per share, meron tayong company A, B, C, D, E. Hindi ko na siya pinangalanan. It is up to you kung anong company gusto mo yan. Ang tanong dito, where we should invest our money na amounting to 136,000. No, that is the purpose of having the PE ratio. Doon tayo titingin. And i-divide natin sila. Magiging answer will be these numbers. Titignan natin ngayon kung saan dyan yung pinakamalaking PE ratio. So, 4.73, 4.02, 0.95, 6.55, and 3.29. Meaning, doon tayo mag-invest sa company D dahil siya yung may pinakamalaking PE ratio. And again, ulitin ko, no, this helps investors determine the market value of a stock as compared to the company's earnings. Kaya nga siya tinawag na price to earnings ratio. Ibig sabihin, malaki yung chance nito na mag-grow pa in the near future itong company D. So, dito tayo mag-invest ng 136 na pera natin. Given sa condition. Okay, so that is the PE ratio. Ay, ito pa pala. May last pa. This is the last one, I think. The payback period. So, when we say payback period, this measures the period to recover the amount of investment. Gaano katagal maibabalik yung amount na ininvest mo. No? So, given the data below, what is the fastest company to reach their payback period? Ang ating formula for payback period is average investment over net profit or 100% over ROI. So, ang conditions ng mga company, for the company 1, we have 16.46 ROI. For company 2, year 1 investment is 8.13 or 8.14 million. Year 2 investment is 12.21 million. Fiscal year net profit is 8.9 million. Sa company 3, we have 6.08 years payback period. So, ano ang magiging sagot natin dyan? Ito po, ang ating computation for that. For the first company, 100% over ROI. Itong second formula ang ginamit natin dahil given sa kanya is the ROI. Walang binigay na net profit or average investment, kaya po yung second formula ang gamit natin. And if we will going to divide those numbers, bibigyan tayo ng 6.08 as payback period. Meaning to say, if we're going to invest in company 1, no, magkakaroon tayo or maghihintay tayo ng 6 years before mabalik yung money natin. No, and ito yung before mabalik yung or ma-recover yung amount na in-invest natin. And after ng 6.08 years, yung mga next na kikitain is the profit na talaga. No, ito kasi yung break-even parang ganun. For company 2 naman, these are the two investments. So, given siya, i-average natin yan. Meaning to say, ang gagamiting formula is this one, the first one. Divide natin sa net profit na 8.9, given dito sa fiscal year daw. So, divide natin tong dalawa, it will give us 1.14 payback period in years. So, 1.14 years lang, convert nyo na lang yung 0.14 into months. Yung 1.14 years, matatapos na, payback na tayo, balik na. Yung mga months or years after that time is for for profit na yon. Company 3 naman, ito binigay na. No need to solve for payback period dahil binigay na 6.08. Actually, pareho sila, no? Siguro yung company 3 ayun din yung company 1. Pareho sila. Now, for us to be able to decide kung ano daw yung company na mas mabilis yung payback period or mas attractive siya as an investment option, dahil ang concern natin is time, of course, dun tayo maglalagay sa company 2, which has only 1.14 years, no, for their payback period. Okay, so that ends. Medyo mabigat yung controlling dahil sa financial na part. Pero ang idea lang, guys, when we say controlling, we are trying to control the whole organization. It just so happen na may finance part, financial ratio analysis tayo. Dahil ito kasi yung general na measure on how our business or how the company is currently performing. No, without looking at their finances, we are just having a subjective arguments or subjective conclusion, kung ano man yun, na walang basis. No? Kaya tayo nagkaroon ng financial ratio analysis for controlling na topic. So, we are controlling every part of business systems. Actually, marami ito, yung sa accounting mismo. Pero ito lang yung nilagay ko dahil ito yung summary kumbaga ng mga financial statements. So, by this way, we can actually control the organizations. No? Hindi pwede natin kasi maging basis ito ng ating decision making. Okay? So, I hope you learned something from this presentation. I'm looking forward na ma-appreciate nyo somehow yung subject and ma-master ninyo si subject. Okay? So, see you again, guys, on our next presentation. And keep safe always. Enjoy the rest of the day. And of course, enjoy the rest of the week. Again, keep safe always and bye-bye.